market on close. I'm Diane King Hall. Oliver Rennick has the day off. Joining me now, we've got Phil Strevel, Chief Market Strategist at Blue Line Futures. Always love his weekly Friday takes. All right, Phil, we're coming to you with another familiar Friday question. It's about tariffs. President Trump announced reciprocal tariffs yesterday. When you think about the announcement, and given that some of this, maybe things down the line, what moves or levels are you paying attention to in commodities, given the most recent tariff headlines?
Well, it's caused incredible volatility in the precious metals and industrial space today. We see copper it experienced one of its most extreme dislocations due to the potential of tariffs. It's driving a record gap in the prices between U.S. prices and global prices. Now, there aren't currently any U.S. tariffs on copper yet. However, President Trump has announced 25% tariffs on steel, aluminum imports. He mentioned slapping them on copper, but he hasn't stated what rate that it's going to come. So what happens is you see a lot of these different commodities out here really making some movements. A lot of people that are end users that need this product are trying to import it ahead of any kind of tariff being laid on. If you're a builder, if you're going to manufacture something and you need these products, you want to get them in as soon as possible, or you want to buy up the domestic supply that's out there, and that's what's driving a lot of commodities.
All right, let's talk a little bit about the price action in crude oil. Right now, I'm taking a look at WTI below $71 a barrel. It's under some pressure, but it's kind of been all over the place today. We're seeing volatility in that space as well amid these geopolitical headlines, OPEC plus policies around that. So are traders focused more about kind of the supply demand questions around crude oil, or picture, I should say, around crude oil, or does the geopolitical picture matter more?
So that's really the problem and the conundrum that a lot of traders have. So when you have these two disconnects on fundamental news and you're trying to weigh in which is going to impact it more, that's when it's best to take a step back and look at the charts and identify key levels. On crude oil, $70 is your critical level of support. We break below there, we could see the market really, the floodgates could open. But you look at something like, again, on oil, it's just trying to juggle several different fundamental factors. You have Iran, which is the seventh largest producer. The question is, what's the likelihood that the Trump administration is able to significantly reduce Iran's crude oil exports? And then you go to the flip side and you say the International Energy Agency has reported that the global oil market is going to likely see a small surplus, which that's bearish. So that's why you need to step back and look away from the fundamentals, because the fundamentals are going to suck you into an emotional decision making. And as a trader, you want to be objective. You do not want to have emotions involved in your decision process, especially when it's just a coin toss at this point.
I like what you said, especially when you think about like critical levels to pay attention to. At the same time, President Trump has made it clear he wants lower oil prices. Given where crude is trading, do you still take that into account, the critical levels that you just mentioned for oil?
110%. So what I think that the playbook is that they want to take Iran offline, but they want to get our domestic production up. They want to make it secure that we can get these resources in here as far as oil if it's necessary. They restock the SPR. They get oil probably into those low 60s, high 50s. And then that's when you have the ability to take offense and understand that crude oil prices will snap back on any kind of taking Iran offline. So that's when you would get the jump back, and the jump back wouldn't take us from $70 to $85 or $90. It might take us from the high 50s back to the high 60s, which I think we can live with.
Phil, from your point of view, what seems to be kind of a moving momentum with traders now? Is it more about the macro picture, or is technical analysis? Does that matter more right now, especially when you talked about taking the emotion out?
Yeah, well, I mean, you want to be like objective on anything. You want to look at, what are the economic data releases that are going to impact the particular market you're in. How can it drive it? How will that adjust Fed policy? And then you have that as one element of it. And then the other element is the wild cards, obviously Trump and the tariff talk. But then you go back to a simple systematic way of trading in these markets, whether it is something as simple as, attacking the long side when we're over something like the 200-day moving average, things like that. You really want to have a plan. You plan your trades, you trade your plan. You look at gold. I mean, the next thing that people are going to be looking at is the PCE report on February 28th. That could give you clues as a central bank's easing path. If you see that come off, you'll see those expectations for a rate cut that'll come in, and gold prices should rise again. Gold prices were under an incredible amount of pressure because there's speculation that the Russia-Ukraine war could potentially end at some point relatively soon. So I think this $50 pullback is most likely geopolitical premium coming out of the market.
And let me get your take on the moves that we're seeing in crypto. Bitcoin it hasn't been so volatile recently. We often see these explosive moves. We're not seeing that now. When you see kind of how it's trading, is it trading more like a risk-on asset, or is it trading more like, how some view it as like digital gold, like a store of value?
Well, the best thing you want to see happen in Bitcoin is the lack of volatility there. People were playing originally for the volatility and everything, but if you get a lack of volatility, you'll get price stability. Price stability opens it up for more investors to come into. They're less going to say, oh, that asset was too volatile. Now all of a sudden it looks more like a stable coin. You get more people coming into that product. You get ETFs adding it. You get different target date funds, pension funds, things like that. And that's what lifts it up. And we get to the 125, 150, 200,000. You don't necessarily want to see markets so volatile because it's just going to chop people up and really turn them off as far as having it as a viable asset class in their portfolio. So it's nice to see some stability.
All right. Love this conversation, Phil, today about both wanting to see more stability within crypto / in Bitcoin in particular and across the commodities. Love your take, positioning to think about, et cetera. Phil Striebel, Chief Market Strategist, Blue Line Futures. Thank you so much. Have a great weekend and happy Valentine's Day.
You too. Thank you.